Actually, I thought that in last month itself our market will cross new high, but it did not happen. I was little disappointed in that, but I expect that in coming days market will go up, and I am bullish for the last 1 month onwards, but still market unable to cross previous high and testing my patience. But there are all ingredients for market to go up. We are expecting that our economy will do well in coming days. Already there are signs of that, and our GDP growth also likely to see revision upwards from leading economists in coming days. Overall, our economy is to do well, and what is happening is that mainly foreign institutions are selling. So why they are selling means globally, if you see that seven stocks in US, they are doing very well. Mostly it's an AI trade, artificial intelligence trade. Unfortunately, in India, we don't have any companies in AI for foreign institutions to invest. So probably since we are underperforming, our earnings growth were muted. They are selling in our country and buying in other countries where the AI trade is possible. So some of the countries where they are buying are in South Korea and Taiwan, where lot of hardware chips and all getting manufactured for AI. That's why we are underperforming. Suppose everyone tells that there is a big possibility of US market getting a huge correction, and lot of videos also many are getting, and many of our clients also forwarding to me whether it will happen. In that case, what will happen to our Indian market? They are asking. But I expect that if there is a normal correction in US, most probably that our markets may well outperform global markets, because we did not participate in the upward rally in the last 1 year in the global market rally. So when they starts fall means most probably we may outperform, because some part of money may get shifted to our country as the earnings are started improving, and on relative basis India may look better in that sense. So we will see how things pan out in the coming days, and in the market still in consolidation, and one big sector which is doing exceedingly well is the financials. In financials, if you see that except the large private banks, HDFC Bank and ICICI Bank, all other segments were doing very well, especially the PSU banks, where most of the banks has done phenomenally well, including the largest bank SBI, which it touched all-time high at historical high prices, and other PSU banks like Canara Bank, Union Bank, and PNB. Almost all PSU banks were doing very well. The second trade which is happening is the NBFC trade, where many NBFC companies were doing exceedingly well. And yesterday you have seen that the L&T Finance, it touched 10% ceiling in F&O, and it held for throughout the session. Similarly, AB Capital, like many NBFCs also doing very well. One of the reason why they are doing well is that lot of deals were happening, that I will explain in coming slide. So overall, the financial sector is doing very well. Last meeting itself, I told that by seeing the screen, lot of buying is happening in the financial space, and some deal has been announced. For example, in Federal Bank, 10% stake is to be bought by Blackstone. That one deal has come, but we are expecting a couple of more deals to be announced in coming days. I am seeing a huge movement happening in this Sriram Transport, where possibility of some deal may come. Similarly, L&T Finance also, the price movement is showing that some deal possibility is there, but still till it is announced, it is not confirmed. So a lot of PE players are showing big interest in our financial space. That's why the stock prices are going up. And one important phenomenon which I have been seeing for the last many months is that many stocks which are trading at a very high earnings, 60 PE, 70 PE valuations, they are getting derated consistently. Many stocks now are trading at 5-year low, 6-year low. The price which we have seen at 2021, that there the prices are trading now. Many good companies, these are all not bad companies, they are very good companies. Companies like Bata, if you see that it is approaching towards 1,000 on the lower side. it went up to 1700, gradually grinding and coming down. Now it fell below 1100. Similarly, Kajaria Ceramics, a lot of good Astral Pipe, many good companies, they are gradually grinding down, they are getting derated. The main reason for derating is that there is no earnings growth in this company. So one side the derating is happening, and on the other side, if you see that the volumes in many mid cap stocks has come down. Many companies which used to trade a couple of lakh shares by 11 o'clock or 12 o'clock in the morning, if I see now their volumes are just 20,000 shares, 30,000 shares, like that. So except the sectors which are in fancy, the other sectors the volume has mostly dried out. So what will happen is that if you try to sell some big quantity, means the price will come down. Similarly, if you try to buy some big quantity, means initially it will go up, again sellers will come and price will fall. So that is the phenomenon, it is happening on the broader market. And other major news is that the India US trade deal not yet happened. So one big condition US has put for that to happen is that India has to reduce Russia oil imports they have put in. Apart from that, they have put other conditions also, that Indian market should be opened for agriculture products, US agriculture products and dairy products. So the one part that Russia oil import, most probably it may start coming down from a third week of November onwards, because US has put sanctions on two big oil companies, Rosneft, which is the largest oil company in Russia, is a government owned. If you see the Russian stock market, Moscow exchange, this Rosneft alone has a huge weightage in that index. So it's such a big company. So the US has put a sanction on that company, which means that India is likely to stop buying directly from these companies. Maybe indirectly there may be possibility of buying, but the quantity of oil which India bought in the last many months, that is likely to fall. And gold, after a spectacular rally, some profit booking is there. Silver went up to $55. Now it is around $47. Almost 15% correction from peak has happened. Gold near to 4,380, 390 it went. Now it is around 4,000. Near 10% correction has happened in gold. So some profit booking has happened, but still a lot of ETF inflows are coming, flowing into gold and silver. And Nifty, if you see that, it's up marginally, 0.8% up between last meeting and this meeting. Mid cap up by 1.9, whereas small cap down by 0.6%. And this is the interest in the financial space. See, these are 6 deals which has happened in the last few months, where investors were either a PE player or banks, they have invested. And if you see that IDFC First Bank, it almost 7,500 crores to be invested by Warburg Pincus and ADIA. ADIA is this Abu Dhabi related company, and RBL Bank, Emirates NBD to invest. They are going to become the promoter of RBL Bank. So we have to see how this pans out, because a foreign bank is going to take over an Indian bank. Whether what are the conditions RBI going to put, that we have to see it. A lot of conditions are there for someone to take over bank, especially foreign one, because the voting as of now in a PSU bank, whatever stake you hold, you don't have voting beyond 10%. So that is a restriction currently has. Similarly, for private banks, it is 20%, I think. So even if you own 50%, 60%, your voting possibility is only 20%. So this one, what are the conditions RBI going to place on Emirates NBD, that we have to see. So 26,850 they are going to invest in RBL Bank. Federal Bank, the Blackstone announced it. They are going to put in 6,000 crores. They are going to put in. Yes Bank Sumitomo of Japan, 15,800 crores. So in that only Yes Bank, in that only SBI and other banks which bailed out Yes Bank few years back, they sold stake in that. Apart from that, they bought it from other block deals from PE players also Sumitomo bought. Totally 16,000 crores they have invested in Yes Bank. And international holdings they have put in Saman Capital, which is nothing but the India Bulls housing finance, old name. 8,800 crores. Manappuram Finance, another PE player, Bain Capital, they are going to put in 4,300 crores. Almost 6 big deals has been announced in the last few months in the financial space. Most of them are PE players and some banks also there. And if you have and market is telling that some more deals may come in coming weeks and coming months. There is a very good possibility in NBFC space. So the list is going to get elongated in coming months. Until more deals are going to happen means stock prices will remain active. So historically it used to happen. Suppose a big deal is going to come in a sector means that entire sector will do well. Similarly, when an big IPO is going to come means that entire sector will do well. In 2007 when R Power IPO was announced, entire power sector did stock price went up very sharply. So next year what we are expecting is that the Geo IPO is going to come. Market is we are hearing news that the Geo may come by IPO next May 2026, mid 2026, where the amount size will be around 8 to 10 billion. That means 60,000 crores, 70,000 crores of IPO is going to come. And the market valuation they are expecting is around 150 to 180 billion dollars they are expecting. So such a very big IPO comes means naturally when such a big IPO comes means what is to happen is entire market will do well. Market will do well and more retail investors generally they come during this type of IPO into the market. Historically it has happened. The other news is that India to import less Russian oil. Till now India was very adamant on importing Russian oil in spite of all Trump threat, in spite of Trump putting a 25% additional tariff on India for importing Russian oil. Still India imported it. But now what happened was that US has put sanction on these two companies, Rosneft and Lukoil. From November 21st onwards, these sanctions will come into effect. So the buying from Russian oil, India has a lot of benefits, advantages. The first one is that the price, they gave some discount initially. When the price was around $90 to $100, they gave nearly $8 to $10 discount they gave it. So India had some benefit in the price benefit in that. Apart from that, the price settlement now. If you buy oil from Gulf countries and other countries, you have to settle in dollar. Whereas when we bought from Russia, we settled in ruble, we settled. So that means in rupee we paid it. And what happened was that Russia was holding a surplus rupee. We also export some items to Russia. So net trade deficit was huge with Russia. And Russia was holding Indian rupee and they invested in Indian government bonds also they invested. So the currency benefit also we had it while buying with Russia. After that we were settling with when trade deficit went up very sharply, then we started settling with Chinese yuan and UAE dirhams we started settling. So apart from price benefit, the other benefit we had it was that there is no need for dollar to make the payment. That's why India was continuously importing oil from Russia. Almost at one point of time our total oil import was almost 40 to 45%. But now what happened was that two major Russian oil companies, Rosneft and Lukoil was getting sanctioned. So once this sanction comes means then it will become very difficult to import oil because the ships they won't carry Russian oil if sanctions are there. Similarly, the other issues are there. Once we are trading with companies which are in sanction means then we cannot export that product. So a lot of issues are there. That is why India and both China and India decided that they will reduce Russian oil import.
But one thing here Reliance is there. Similarly, one Russian
now
is
Nayara.
That are also a big producer.
Yeah, Nayara is the subsidiary of this Rosneft.
Yeah.
Rosneft is subsidiary. See what was happening is that Nayara and Reliance, these two private companies were importing huge oil from Russia. Now these both companies cannot import oil from Russia because of this sanction. The second thing is that this Rosneft in India they have Nayara refinery, whereas in Germany also they have one refinery. In UK also they have one refinery, but US has given exemption to this Germany refinery and UK refinery from sanctions. That means UK and Germany will continue to import Russian oil, whereas only India cannot import it. So that issue also everyone is mentioning. Why alone India is getting targeted?
No, but one thing Indian refineries are the best compared to other
Countries, yes, sir. Also, the transport distance is very large. If you buy from Gulf when compared to Russia, means what will happen is the transportation charge will come 3 to 4 times, because the distance traveled to bring Russian oil is almost 3 to 4 times when you compare with Gulf oils. So transport charge is very high. In spite of that, India bought it, but now because of sanction, no, this will start reducing. From mid-November onwards, Indian oil direct imports will fall sharply from Russia. It will fall. So now the main trigger for the market is the US-India trade deal. So market always needs some trigger for stock price to go up very sharply, to come into a bull market trajectory. So that one which markets were waiting is this US-India trade deal. Once it is announced, means then definitely market will see huge up move. Also, there are a lot of other positive news are there. RBI rate cut, then CRR cut, GST reduction is there, good monsoon is there, then IT income tax slab has been revised. So all these will boost domestic dependent companies, whereas for export related sectors to do well, US India trade deal has to happen. Already we started reducing this Russia oil import. It will get reduced from December onwards, and we are feeling that the trade deal will happen by November or December. It should happen. If happens, means then it will be a big trigger for the market to get a re-rate. And Q2 earnings are coming, so it's a very interesting earnings season this time. Unlike in the last 4-5 quarter, this time it's a very interesting earnings season, because a lot of companies earnings were very good. Very good means, you see, one company called GE Vernova. Some of the companies in power sector, GE Vernova, which old name was GE T&D. The stock price was ruling around 100 rupees, 120 rupees 3-4 years back. Now it is trading around 3000 rupees. If you see the earnings, you can see how the profits and revenue has multiplied in the last three years. Similarly, another company, Hitachi Power, which is demerged from old ABB. You can see the order book and the earnings went up very sharply. One company called Force Motors, which 5-6 years back we were continuously recommending it, and the price did not went up. Now if it is now trading at 18,500 levels, you can see the profit how it has got multiplied. Similarly, some of the auto ancillary companies, the profit has gone up very sharply. One company called Newland Lab. If you see 5 years back what was the earning, now what is the earning, like that you can see that many companies where earnings has gone up very sharply, and stock prices also has multiplied by 20 times, 30 times in a matter of the 3-4 years. It has done. So like that, many companies earnings were positively surprised, those who are watching the earnings very closely. And auto and ancillary company posted good results. Some of the auto ancillary companies, last time we gave pre-call 2 months back, and the digital meter, if you see, they're entirely supplying to TVS motor. They are supplying it. If you see a TVS motor bike, and if you just put the key and switch on, means the digital meter itself, it will attract a lot of features are there. And when I bought a bike for my son 3 months back, at that time only I came to know that this much features they are adding into the digital meter in a two-wheeler. So this entirely it is done by pre-call only. 2 months back we recommended. Yesterday the stock went up by 9%. Auto similar, one company called Gabriel India. previously we have recommended. Those who are following our recommendations, they would be knowing when we are recommending the price was 150, 200 rupees in that range. Now it has crossed 1400. Many auto ancillary companies are doing shown very good results. IT company posted inline results, but the expectation was very low. So optically the numbers were looked good because the expectation was very low. PSU banks, NBFCs, they were posting decent results. And strong performance select companies, as I told now, in mid and small cap space, there are some companies which have posted very good results. So this is relatively a better earning season when compared to previous quarters. So previous quarters most of the companies did well. So this time at least we can find 10-15 names of good companies. One BSE listed company we have recommended this time. The recommendation list. Kenna Metal is a US subsidiary company. So the results were good. That's why we have recommended it. Valuation is also reasonable, and they're going for one greenfield project. So like that we can get 10 to 15 companies which have posted better results, and also in futures also looking good. And this is the Q2 result performance of 1047 companies. So this one, when you see that the sales around 9% it has gone up, profit has gone up by 16%. When compared to last year, no, sales has gone up by 6.5 and profit was flat. This 1047 companies, and whereas if you take Nifty companies, the profit growth is still 6% only. It hasn't gone up. When we till now around 38 companies results has come. If you compute that, the Nifty earnings has gone up by 6% only. But we are expecting that from the second half onwards, the earnings of Nifty also will improve. And these are some of the companies which have posted very good results. Just an example of that, Naveen Fluorine, CCL Products, Privi Specialty, which is in the perfume chemicals they are manufacturing. The Naveen Fluorine is the fluorine based chemical company. SRF is there. Naveen is one of that company. And Privi Specialty and Schaeffler is the bearing company which we have previously recommended. So these companies have posted good results. So why they have posted good results now? If you see all the four companies, if you see that they have did significant capex in the last 3 years. See, many companies were hesitant to put capex. They will be waiting for the demand to come. But if you wait for the demand to come, when you put capex, means it will take 2 years, 3 years for it to materialize, to get reflected in P&L, because the capex will take its own time, acquiring land, putting machinery and installing it. But all these companies and all, actually Naveen Fluorine and CCL Products, these three companies took debt and put the new projects. Naveen Fluorine, CCL, Naveen Fluorine at one point of time it was zero debt company, but they are having 1000 crores debt. They have completely financed their project through debt. Similarly, CCL took debt and financed the previous specialty, but all this they have done very well, and they have showed the seed, and now they are reaping the harvest because of the capex they have done it. Similarly, if you take that Kitex is one company where they have put in a huge plant in Telangana, but some luck also needed. Suppose if US gets into problem for 1 year, 2 year means, then Kitex will be in trouble, because their new plant is also financed by debt. Not all will get success. One company called Heikel, 3-4 years they spent a lot of money, but nothing was seen in their P&L, because they had some issues with the US FDA and some management issues. So we have to, if we pick 4-5 companies which have did capex in the last 3 years, means at least one may get failed, at least 2 or 3 will get succeed. So if you see that many mutual funds and other growth investors, what they will look first is that whether the company has did any big capex in the last 2 years, 3 years. If they have did miss, then they will take it for doing research, and they will, and if it is comes to the criteria, means then they will buy. So doing capex It's one of the important criteria where research managers will look before buying a growth stock. Another important thing which is happening in the US is the legality of the reciprocal tax. So the US Supreme Court hearing on legal reciprocal tax has already started, and Supreme, what they are saying is that only 20% chance of Trump winning in that. That means 80% chance of case turning against Trump, and verdict may come against Trump reciprocal tax, because Supreme Court questions this Trump signature policy. You can see that whenever when you have an Trump is making interview, means he will put a big sign on some board. He will put his sign that I am putting this much tariff, 25% tariff on India, because they are importing Russia oil. So Supreme Court is asking, on what basis Trump is putting a signature, just a simple single signature cannot make it, because Trump has levied tax under International Emergency Economic Power Act. He has levied tax. What Supreme Court is asking is that the US President do not have power to levy tax under this International Emergency Economic Powers Act. He don't have power on reciprocal tax, because it has to be passed through like Parliament. It has to be passed by all members, and then only tax can be levied. That's what Supreme Court is saying. Apart from this reciprocal, country-wise reciprocal tax, Trump has put tax on automobile and copper import, like that. What the Supreme Court and legal players are telling is that will be there. Trump has power to levy tax on this auto imports, like that. Whereas the country-wise reciprocal tax, he don't have power. Most probably in the next 2-3 months the verdict will come, and it looks like that right now only 20% chance of Trump tariff will fall. That means most probably the Trump tariff is not likely to hold, and Supreme Court likely to give verdict against Trump. And if that happens, means the whatever reciprocal tax US government has collected till date, it has to be given back to the people who has paid it. So that issue, there is a possibility of coming.
Not only that, actually the Americans are now, they have to spend more on this one.
Yeah, the inflation is also there. Yes. And the other important thing which has happened is that US has reacted to China pressure. See, when US said that they are going to put a huge levy on China, then China told that we are going to restrict rare earth material to globally to all countries. So if you take that rare earth is mainly used in semiconductor industries and EV, and if China stops, what will happen? Entire the AI rally which has happened in the last 1 year, that will get unwinded, because if there is no semiconductor raw material for making semiconductor, means then where is this artificial intelligence? Because the AI entirely depends upon this data centers, where the main thing is that in data center you need lot of power, as well as you need lot of chip should be there to process the data. And if you cannot manufacture chip, means then the entire AI rally will get over. So Trump immediately what he told, that he talked with Chinese president and said that he will not put it. Similarly, rare earth material exports to US, China told that they will continue without restriction for 1 year. So almost it's like that the China US has surrendered. It looks like that. And China stopped US soybeans import. Now they will told that they will start importing US soybeans. And Fed rate cut is the they have made 2 cut, 0.25, 0.25% they have cut. It has come to 4%. What is the funny thing is that the US government is in shutdown for the last 50 days. That means that no data will come from US, but just 1 week before US Fed meeting, only the inflation data came. That data was also no, it is better than, it is lower than expected, which means that data has been put in to show that Fed will cut rate. So that data alone came from US in spite of shutdown, and based on that data, US Fed has cut interest rate to 4%, and almost 50 days the shutdown has happened, and most of the airplanes are not flying in US because of the shutdown, and some of the almost 1.9 million people were working without salary. If there is a shutdown means government will not give any salary for the government employees, and some of the employees were on furloughs. That means they, some of the non-crucial departments, no, they no need to come to government offices to do work, whereas some of the crucial departments like military and all, they have to come for work, but they won't get any salary because of the shutdown. Apart from the US Fed rate cut, the one of the other important thing which has happened is the quantitative tightening. They have stopped it. This is the US Fed balance sheet. If you see the balance sheet, it has been gradually coming down. In 2020, they put a huge stimulus because of that COVID. The balance sheet almost doubled from 4 trillion to 8 trillion, and from there now it is gradually coming down. If you see that, how, why it is coming down? Because they were selling bonds. The bonds which has been uh, bought by US Fed during quantitative easing, they were selling bonds. The quantitative tightening is the opposite of quantitative easing. Quantitative easing means US Fed will pump money into the economy, whereas because of huge money spent during the COVID time, the quantitative tightening came. That means the fund has been, liquidity has been getting sucked from the US economy, and right now 40 billion is getting sucked from the US economy. That means that the US Fed is selling 40 millions of bond every month. That is going to get stopped from December onwards. So the quantitative tightening is going to get over, which means that liquidity which has been getting sucked from US economy, that will get stopped. That is one important announcement made during this US Fed meet.
See here, the 2008 actually similar way, one sharp rise.
Yeah, 2008 this one came, no sir, global financial crisis came, no. At that time also the huge stimulus US Fed made to bail out companies like Fannie Mae, Freddie Mae, and some of the banks in US. But when compared to COVID, it's nothing. It's look, US 2008 is a small one, but during this 2008, it looks like a very big stimulus. And see the stimulus size of during the COVID, 4 to 8 trillion dollar, almost doubled. So these are some 7 stocks which has been going up continuously, and everyone is saying that that the US is in a big bubble. But even if in US, if bubble collapse means only these 7 stocks only going to fall. Broader market is not going to get impacted. If you see the market cap of these stocks, Nvidia is 5 trillion, which is more than the Indian GDP size. Microsoft and Apple are almost equal to the Indian GDP size. And Nvidia stocks, it was listed long back. But if you see the stock price in the last 4 years, 4-5 years, if you see that it has multiplied multiple times. 20 years, 30 years, the stock did not did anything. But in the last 4-5 years, it is multiplied by multiple times. The Nvidia, Alphabet, which is the Google, Amazon, Meta, and Tesla. All these 7 companies, they are told magnificent 7. These 7 companies, and if market stops, bubble burst means these 7 companies going to fall more, and some of the chip companies, semiconductor companies, and if you see in South Korea or Taiwan, these companies may fall. But in India, this time unlikely to get affected much, except maybe some IT stocks may fall. But whereas in 2000, when the IT bubble burst, .com bubble burst, India has lot of IT companies at that time. Satyam Computer, Infosys, Wipro, all these companies fell very sharply. This time we don't have any AI related trade in India. So one thing that is one positive in it. And this is the largest economy. If you see that US economy is 30 trillion size, whereas this 7 company itself, market cap itself coming near to 20, and Indian GDP size is 4 trillion. Nvidia market cap is 5 trillion. Microsoft market cap is 4 trillion. And other important thing which happened in the last 2-3 months is that the cross investments they are doing. That Nvidia will invest in one company, the other company will invest in an Oracle. Oracle will again buy a chip from Nvidia. Like that, some circular investment was announced, and based on that, the stock price was going up by 5%, 10% like that, without actually made any investments. Just by announcements, market cap was going up by 100 billion, 200 billions. So it's a very important slide. See, everyone was saying that WhatsApp, many I'm getting lot of messages forwarded by clients that US in a bubble, US will collapse anytime, dollar will become like a toilet paper, like that. A lot of videos were coming, lot of the written up informations were coming. But US debt is an alarming level. Is it a US debt at alarming level? Maybe US debt maybe at an alarming level. But if you see the components, no. See, in an economy, there are people, 3-4 participants are there. One is the government, which is an important one. Then corporates are there, non-financial corporates are there, which are companies. Then third one is that the common man like us are there. But if you see the debt level when compared to GDP, if you see between 2009 when the global financial crisis came in January 20 during COVID time, and now this is April 2025, means in current financial year, if you see that only the government debt to GDP has gone up very sharply, whereas the other one, US household debt, actually it has come down. Government debt to GDP in 2009 it was 80%. So they made an so at that time government bailed out big companies. January during COVID time it was 107% of government debt to GDP ratio. Now it is 119. So the government debt to GDP ratio has gone up very sharply, and it is at alarming level. But that alone we should not see. We have to see the other things also, which is nothing but the US household debt to GDP. At that time it was 100. In January 2020 it is 76. Now it is 69. So actually the US household debt to GDP has come down when compared to 2009. When also compared to during the COVID level. The US non-financial corporate business debt to GDP ratio, it is almost at the same level when compared to 2009. It was 47% at that time, and to COVID time it was 54. Now it is 46. US state and local government debt, if you see that also has come down. 22 in 2009, 15 in 2020, and in 2025 April it is 12. So only the government debt to GDP ratio has gone up, whereas the other components of the economy it has come down. So there is nothing to panic. If you combine all the debt, means it is almost at the same level. So it is whenever we see the news, means that government debt is at an alarming level. So US economy will collapse, like that we are seeing. Whereas the other components has the debt level is at a very manageable level only. So we have to take the combined picture. Gold, some correction was there, went to 4,400 level. Now it has corrected to 4,000 level. 10% correction is there. What we are expecting is that some consolidation may happen in this range, because the rally was very steep. The other important argument coming in the social media is that the IPOs are overvalued. The sellers are not good, like that they are blaming the sellers. You see, why should whenever see, even if you take me or anybody, seller always try to sell at a higher price only. Only the buyer has to see whether I can buy or not. So instead of that, there is no point in blaming a seller that he is selling at a high price. Seller will always try to sell at high price only. If we are not interested, means we should not buy at that price. So it's always a buyers beware market. Our markets, stock market is a buyers beware market. That means buyers should be cautious. Sellers always try to sell at a high price only. We should not blame the seller for he is trying to sell at a very high price. See, Lenskart recently came with an IPO, and in a social media, if you see that everyone blaming the promoter of the company and the lead manager, the investment banker, why they are selling that. Why should we blame that? If you are not interested to buy means don't buy. Why? For no one is forcing to buy at a higher price, no. And in Lenskart, there lot of debate happened. There is no point in blaming a seller. See, seller always try to sell at the highest price only. Any seller, suppose somebody has a land, means he always try to sell at a high price only. If buyers don't come in, means then they may reduce the price. But blaming the seller is not an correct. And investment bankers, they are always loyal to sellers only, because it is the sellers who pays fees to them. So the mandate of the merchant banker is that they will try to sell at a high price only, because the seller is giving fees to them, they will be more loyal to the seller only. So only the buyers has to do proper due diligence and assess the risk in buying. Suppose if we feel the price is too high, means we should not buy. If everybody starts thinking like this, means naturally the seller will reduce the price. But there is no point in blaming a seller that he is selling at a very high price. The foreign institution, overall they are selling it. In October some short covering was there, but still they sold at overall net selling was 2,300 crores. On derivative expiry day, the buying was almost 10,000 crores. They made lot of short covering. So near term view, for Indian market to do well, this US India trade deal is very crucial to see breakout in our markets. So domestic liquidity is there. That's why we are seeing lot of, in spite of market is in consolidation for the last 13-14 months. Still, if you can see that many sectors were doing well, like banking now doing well. Many stocks were touching for a new high. It will remain a stock pickers market. Stock pickers will do very well, because so many companies earnings are coming good. That will get reflected in stock prices in spite of stagnant market. But once the US India trade deal happens, means then definitely market will see a breakout. Q2 results, then US trade tariff, then the Bihar election verdict is there on November 14th. Maybe 1 or 2 day impact it will be there on the market, not more than that. Thank you.